After two sessions of strong gains, stocks consolidate amid global geopolitical uncertainties. IT and financials drag even as realty and industrials eke out gains.
Interglobe Aviation co-founder Rakesh Gangwal sells another 5.7% on Indigo Airlines parent for nearly 12,000 crore rupees. This is the sixth large chunk sold since 2022 via a block and leaves him with under 8% in the carrier.
The promoters of PG Electroplast sell 5.6% stake via block deals, while the parent of Sagility India offers up to 15% equity at a base price of 38 rupees per share to meet the minimum public shareholding norm.
Rajiv Jain, chairman and CIO of GQG Partners, tells CNBC Prime India is the part of the solution in Trump's ambition to rewire global manufacturing. He remains bullish on India and recently added Bharti Airtel and HDFC Bank to his portfolio. You're watching us here on Halftime Report. Good afternoon. I'm Mangalam Malu. With me, Ekta Batra. We started by giving up some of the gains that we saw in yesterday's trading session. Went to the lower end of the range at which the Nifty was seeking support, took support from there, and now we've recovered from those lows. Still about 70 points below yesterday's close, but the good part is the Nifty Bank is mildly in the green, as is the mid-cap index, telling you that this is just a consolidatory phase ahead of the May series expiry. Hi, Ekta.
Hi, Mangalam. Yes, absolutely. So taking a little bit of a breather for the markets at this point in time as we wind down earnings season as well. So we have the Nifty, which is just about lower by around 44 odd points, and the Bank Nifty, which is higher by around 45 odd points. So it's a mixed day, you'd have to say, in terms of the indices, but largely you'd have to say that it's consolidatory in nature. Lot of stocks in focus. So earnings today, we have LIC, Hindustan Copper, NMDC, which are in focus in terms of numbers coming out, and a lot of stocks which are buzzing around either in the back of news as well as numbers. So I'm just going to name a few. KC International, which is buzzing in today's trading session. We have Schneider Electric, which is higher today as well. So that stock should come up for you. And Orchid Pharma, which is under pressure in today's trading session. So a lot happening in the broader markets in terms of specific stocks. But let's, in fact, kick off the show with another company. RateGain has slipped over 8% after the company's FY26 guidance on both growth and margins disappointed. Reema's here with more.
The company's conference call was yesterday, and they're guiding for a 6 to 8% revenue growth for FY26. This is sharply lower than the 12.5% growth that they had in the prior years. And before that, the company was growing at 50-60%. So this is the lowest revenue growth since FY21, its listing. Secondly, even the margin guidance, 15 to 17%, is a sharp drop-off compared to the 21.5% margins that they had in the prior year. And the company said this is on account of increased marketing expenditure to expand into APAC and Middle East. Now, analysts believe what to watch will be any sort of M&A action. The company has been scouting for M&A. So far, they've held back, citing very high valuations. But now analysts believe that considering the growth is slowing down for the company and they have cash of 1290 crore rupees, perhaps an acquisition is going to be imminent. And that's going to be the next trigger to watch. Today, Phillip Capital has downgraded the stock to neutral. Back to you.
Okay, all right, Reema, thanks very much for that. So that's on RateGain, which is under pressure. Electra Green also is in focus as the Maharashtra government has cancelled the company's e-bus tender worth around nearly 10,000 crores. Hormuz is here with more details on that.
It was a negative development indeed for Electra Green Tech, and the news developments came in from the Maharashtra Transport Minister Pratap Sarnaik, who wrote on his social media account on X that he has ordered officials to cancel the tender that was awarded to Electra Green Tech for these 5,150 electric buses. Of course, he didn't name the company in his post, but it is Electra Green Tech that had received this order from the MSRTC back in 2023. Now, Sarnaik also mentioned that the company has failed to adhere to the delivery timelines that were given for these electric buses. The MSRTC also gave them a revised timeline, according to what the minister said, to deliver 1,000 buses at least by the 22nd of May. But none of those buses were delivered within that timeline by the company. And as a result, the minister has instructed officials to cancel the tender that was awarded to the company. Now, Electra Green Tech had announced in July of 23 that the consortium that it had with Heavy Transport Private Limited has won this LOI from the state government, and the order was valued close to 10,000 crores for a 12-year period. And EVI was supposed to procure those buses from Electra and deliver it over a 24-month period, which is until July of 2025. And Electra, all through this duration of the contract, was supposed to provide operations and maintenance services as well. So as a result of which, now between July of 23, when the company won this order, and until February of 24, the stock gained more than 130%, hit a record high of over 2,200 rupees. And since then, till date, the stock is down almost 45% from those levels. So a negative development indeed for Electra, the stock among the top losers on the Nifty 500 today.
Take that point. Hormaz, thanks a lot for that. From the highs, the stock has seen a big gash, as he pointed out. But a couple of other stocks which are under pressure today, both down about 5%. And we had alerted viewers about this in top 10 this morning as well, were Blue Dart and Brainbees. If you look at Blue Dart, the overall revenue growth was just 7%, but that had a bearing on its operational performance. The margins came off by nearly 200 basis points, and that's reflected in a big cut that we saw in the net profit as well, from 77 crores down to around 55 crores. The important part here, the company is blaming, or rather, speaking about this in regard to the weakness that we're seeing in macro environments. They're saying that the last 1 year had a lot of challenges, geopolitical uncertainty, macroeconomic volatility, and sectoral challenges. So it's attributing its underperformance to the overall weakness that we're seeing in the macros. On Brainbees, however, the problem is that the international business isn't firing as well. So on a reported basis, the margins have come off from 2% to about 0.8%. But remember, the company in its own calculation adds the other income part and also has taken off some of the one-offs. And they are saying that the EBITDA, actually the adjusted EBITDA, has grown by 20%. Be that as it may, the India business is the one which is doing well. We have the India business revenue growing higher. We have a mild improvement in the India EBITDA margins as well. But the international verticals of the company that include the likes of Global Bees and the international business has seen both a revenue and an EBITDA decline, or rather widening of the EBITDA loss. So that's something which is weakened, and as a result of which the stock is down about 5.5%.
Okay, all right. Thanks very much for that. Well, let's get another stock in. Goldman Sachs has in fact initiated coverage on Varun Beverages. The brokerage believes that the company has multiple drivers to outperform. Nimesh is here with more.
Hi, Kaina. This is interesting because if you look at the Varun Beverages stock price in the last few months, it's been underperforming on concerns of competition. But it's an interesting report. Goldman has initiated a buy on Varun Beverage with a target price of 600. And they believe that there are multiple triggers for the stock to outperform in the fast-growing, ready-to-drink market. In fact, Goldman believes that Varun is going to gain market share in some of the fast-growing segments like energy drink as well as hydration. The biggest concern was the new entrant Campa Cola, but BofA believes that their scenario analysis suggests that it's not going to be disruptive for Varun Beverages in terms of growth. So that's the key view there. In fact, they see opportunity in the international business, and BofA expects that profitability for the South Africa business is going to improve over the next few years, and they expect the EBITDA margins to improve from 10% to 17% by 27. Valuation-wise, it's at 40 times on FY27 EPS and below the median versus the peers. So that's the reason why initiating buy on Varun Beverage with a target price of 600 by Goldman Sachs.
Right, that is about Varun Beverages, higher in today's trading session, rather outperforming all the other stocks that we're seeing as well. But tell you what, we're very excited to unveil our brand new global business news channel. It's called the all-new CNBC-TV18 Prime. This brings you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m. weeknights. Well, interesting consolidation is what we're seeing in the frontline indices, and as you see, the advanced decline lines come up for you. The advances have begun to outnumber the decliners. So for most part of the day, we had the crisscross lines fairly, in favor of declines, and now they have intersected, and we have around 1,400 stocks which are advancing for about 1,100 stocks which are declining. And that brings us perfectly up to speed with what the FNO setup for the day is. The indices are off lows. We have the Nifty, which is now just about 40 points lower. At one point, it was about 200 points lower. We have the Nifty Bank, which is in the green, and we have the mid-cap index, which is firmly in the green as well. And if you look at yesterday's high and today's low, that tells you about what the street is feeling about the range. Yesterday's high on the Nifty was 25,079. And today's low was 24,737. We've been talking about this broad range of 24,750 at the lower level to about 25,100 at the higher level. That's what the Nifty is doing. And for the Nifty Bank, the range is slightly broader. We have 55,000 at the lower level, which is the 20-day moving average. And as we move towards 56,000, which is the previous all-time high of the Nifty Bank, we begin to see some supply. Today's recovery has been led by some of these index heavyweights, and the intraday charts also would tell you the story. Reliance is still lower, ICICI Bank is still lower, but we've seen recovery from lows. HDFC Bank has moved into the green, and we're also seeing some purchase in names like Bharti Airtel and ITC. Both of them are fair weights on the frontline index. As far as the Nifty is concerned, 24,800 now seems to be a bit of a fulcrum for the expiry tomorrow, where a day after tomorrow, that is. 150 rupees in premium for the 24,850 put, and we have the 24,800 call, which too comes up for you about 300 rupees in terms of premium. What does this tell you? Well, it just confirms the range. We have 24,650 at the lower level as a support, and on the way up 25,100 and thereabouts it will be the supply, and that's what is something that we can see through the 24,900 call as well. So we're likely to be in a range, not moving around too much beyond this 500-point range that we're seeing on the Nifty. And that's exactly what the street has positioned itself for.
Okay, all right. We'll take a short break on that note. But up next, we'll connect with the management of Afcon's Infra to discuss their Q4 performance. Stay tuned. Welcome back. Well, quiet day for the frontline indices, but just watch out for IndusInd Bank, which is showing an up move. So that stock is up around 3% Asian Paints, Adani Enterprises, State Bank of India. All of these stocks are showing some amount of traction, but IndusInd is really leading the way with around a 3% gain. On the downside, UltraTech, NTPC, Grasim, HDFC Life, all of these stocks are down anywhere between 1% to close to 2% at this point. But let's get talking to one particular company. Afcon's Infra reported what was a muted said. Revenue and EBITDA margins came under pressure, but the company expects to deliver consistent, sustained top-line growth while maintaining a sturdy margin profile. That's the FY26 guidance. To discuss this, we have with us Mr. Srinivasan, who's the MD at the company, here to talk about the numbers. Mr. Srinivasan, welcome to the show. Well, for FY25, you had indicated, a top line which would be flat to slightly positive. You've missed it. It's fallen 4%, your revenues. What led to this decline, and what's taking place? Is there a slower execution?
Good afternoon. And as you had rightly stated, we had explained flat. And as against that, we had a 4.6% decline. Predominantly, it has to do with the two particular segments. One is due to the geopolitical situation. Bangladesh, there was a significant reduction of, say, about 600 crores in terms of turnover. Few months work could not happen there. And similarly, in Jal Jeevan Mission, there have been delays in terms of payment, and which resulted in our inability to do the work when multiple months payments are not forthcoming. There was a slowdown. That was another impact. Both put together, we had a significant drop of 4.6%. I must say, over a period of last 10 years, on our internal guidance, this is the second year after for COVID year was the first year. This is the second year on which we missed our guidance.
So in that case, just a two-part question, Mr. Srinivasan. What is it that you are targeting for FY26? Has the situation improved a little bit? And what is your order inflow and L1 position guidance?
In terms of our order inflow for the last year, it was around 16,000 crores, which was one of the highest in the history of Afcons. Apart from that, we have 10,600 crores of L1 jobs, which again conversion got delayed. We are in the process. We are hopeful of getting this in Q1. And apart from that, we are expecting to book an additional 20 to 25,000 crores of order book in the current year. So 10,600 crores of L1, which will get converted hopefully in the first quarter, plus 20 to 25,000 crore is our fresh order book. So taking together about 30 to 35,000 crore is the order book guidance for the current year.
New growth, we didn't get that because you said that you saw a decline last year. And
in terms
there
of
was a
revenue,
yeah.
in terms of revenue, we will have 20 to 25% growth.
Okay, 20 to
from
25.
the previous year, 20 to 25%, where our long-term CAGR could be at 15%, and current year it could be 20 to 25% growth over the previous year.
Okay, 20 to 25% growth
Yes.
over the previous year. This L1 of around 10,600 odd crores, does it include any orders from the Middle East that you're bidding for?
No, all these are domestic.
Is there a large Middle East order that you're L1 on separately?
No, we are currently bidding. It is not we are L1 or anything. There's a large Middle Eastern order where we are already pre-qualified and we are bidding.
When you say large, what is it? What is the size? What is the nature of the project? When do you get to know?
It's a Dubai municipality project. It is something which it's about, it could be around $5+ billion, where we are the majority holder, where we are not the leaders. We have taken a local company as the leader. We have a 47% stake over that.
So that means
It's a
that
joint venture.
So this would be a near $2.5 billion project for you if you win it. You are in the bidding stage. Do you have any sense on the timelines of this? By when will you get to know whether you are L1 here? By when does it close?
While the Dubai government talks about Q3 of the current financial year, I would personally feel Q4 of the current year. Because
Q4 of the
being a big
current year. So
project, it takes its time.
And this 25,000 crore order inflow guidance that you have given is not contingent on you winning this order, right?
You are right.
So basically this year you get 35,000 crores of orders. You have a 30,000 crore order book already. And if this were to materialize, this would add another $2.5 billion to your order book,
This
which
could be a game
roughly
changer
equates to, roughly equates to about 20,000 crores.
Yes.
This could be a game changer, you said. So
Yes.
what would be the potential revenue addition that you could see? How many companies are already bidding for this order?
No, here they're going through a concessioner route. And we are not the concessioners. We are only the EPC contractors. There are 3 bidders who are pre-qualified as concessioner for 2 packages. So out of that, whichever concessioner wins, we are tied up with one concessioner. So that concessioner, if he wins, the job will come to us.
So it's a multi-year order.
Yes.
So when will the revenue start accruing and what do you think it could take your P&L to?
I think it's too premature to comment where we have not even submitted the bid.
Right. Typically in orders like this, what is the kind of margin that you enjoy? Let's put it that way. If you were
Typically,
to win,
our guidance has always been 11+% EBITDA. That is what we have always gated. And it would continue to be like that.
And this order is pretty much in that range itself, right?
It could be. If we get the order, we are in the bidding stage,
Yes.
that we must remember.
Correct.
Mr. Srinivasan, just we're not trying to, veer the street in a certain direction by your commentary, etc. But what is your hit rate in orders like this in the past been? Because it is a game changer. Chances are that it might not happen as well, right?
Correct.
What is your personal expectation from this? What does, what kind of inkling does one get?
No, typically in very, very focused high value jobs, our hit ratio is in the region of about 40 to 50%. So on the otherwise, typical our hit ratio over last several years is about 25%. Therefore, I am not in a position to clearly say how it stands because being a big order, there will be a lot of focus by many. Therefore, till such time we get it in hand, we can say nothing about it.
You've executed orders like this before?
Not of this size, but when we were at a smaller scale, we had looked at some bigger project like $500 million, $600 million, $700 million, all these, we are either executing or executed.
Okay. And when do you get to know about this order win? The entire
Last quarter of the current financial year.
by Q4 of FY
Yes.
26.
Yes.
And do you have the capacity as a company to actually execute 30,000 crores in India as well as a potential $5 billion order win in Dubai? Do you have that capacity as a company, or do you need to increase your capacity, which we will probably do in the next 3 quarters?
If you look at it on an average last 20 years, if you look at it, we have a CAGR of about 16 to 18%. So on a consistent basis, we have been consolidating our base and improving thereupon. Therefore, we believe as needed, the organization can scale up. Of course, there is need for consolidating the base and then strengthening the whole organizational setup. And we will do it as needed. That
All
we
right.
have consistently improved. Otherwise, probably we are the only company to have about 16 to 18% CAGR over a 20-year time frame. No other company from India can really boast of that kind of setup.
We understand that point and we take on board all that you are speaking about. But you started this conversation by saying that there were some pressures when it came to them releasing some sort of money, right? On the one hand, you are winning a lot of orders and you are focusing on executing them. But on the other, clients are not, as easy with passing with their money or parting with their money to you. Is there a pressure on working capital? And because of you winning so many orders, do you think you'll have to take a little more loans?
That's a temporary phenomena, what we find. As we said, there were two major events last year. One is Bangladesh, another is Jal Jeevan Mission. And we typically, in our projects, we have never faced receivable issues. But last year was an exception where everywhere by March, all payments get cleared.
Right.
But last year, it was not cleared for some reason or the other. And it was an exceptional year. It is not a norm. The norm is typically we get payments on time, and we have a robust risk management framework which takes care of all these payment related issues right at the beginning.
Therefore, so what are your receivables right now?
Our receivables right now is in the region of about 64 days or so, out of which 30 plus days is in the region of normal our monthly billing, which comes in the next month.
Okay. All right, Mr. Srinivasan, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Afcon's Infra. Let's see, it's probably going to be a momentous year for the company if in case they do get that order worth around $5 billion that they are bidding for for the Dubai municipality. It's via JV where they have around 47%. The stock is up around 1% today, but if you look at it on a year-to-date basis, it's been an underperformer, down over close to 20% this year. We'll take a short break, but Sameet Chavan will join in to tell us some of his trading strategies.
Welcome back. Recovery from the lows is what we've seen, but at the same time, supply at the higher levels as well, all along pointing towards consolidation. As you see, from the highs, Nifty is down about 100 points today, but from the lows, it's higher as well. Sameet Chavan joins in now. Sameet, we've been talking about this 24,750 to 25,050 to 25,100 sort of range on the frontline index. Do you concur with that range for the next couple of days? And if yes, what are your trading strategies likely to be?
In fact, this range has broadened a bit, wherein on the higher side, we are clearly seeing, supply coming in around 25,100, 25,200. And on the low side, there's a strong support around, 24,500. So till the time, Nifty does not breach below 24,500 on a closing basis, there is no reason to worry for. So clearly, it's a, buy around the support levels and sell around the, important resistance levels. That's kind of strategy one should adapt in such kind of market. At least momentum traders should. Directional traders, should keep a close eye on 24,500 on a closing basis till the time it is not breached. One should continue with a positive bias. As long as the individual stock ideas are concerned, we like Tata Chemical. After a long time, it seems that the stock is likely to come out of its recent slumber phase. It has already traversed its 89-day exponential moving average, and the kind of volume participation that we have been seeing since last few days, it suggests that the stock is likely to do well over the next few trading sessions. We like first target of 955. As a trader, one can buy with a stop around 868, and as a disclosure, we have recommended this to our clients as well. The second buy would be on Container Corp. On daily time frame charts, we can clearly see a higher highs, higher lows. The volume participation has increased in last 6 to 7 trading sessions. So we expect the stock heading towards 790 over the next few days. As a trader, one should keep a stop around 728.
Okay, all right, Samit. We're going to leave it on that note. Thanks very much for joining in. So those are some technical calls, but let's move on. International mutual funds are delivering some of the best returns right now, but most Indian investors can't ride the wave. Sources tell CNBC-TV18 that discussions are underway between RBI, SEBI and fund houses to raise the cap on overseas investments. The limit was breached 2 years ago, locking Indian MF investors out of this huge opportunity. Shivani Bajaj gets you more on this story. Shivani.
International funds have delivered the kind of returns investors chase, double-digit global exposure and also portfolio diversification. But Indian investors have largely missed it out. Even as international mutual funds surge ahead, most Indian fund houses remain barred from accepting fresh inflows into the global scheme. The reason? A regulatory cap. Indian mutual funds can only invest up to $7 billion overseas, while ETFs are limited to $1 billion. That cap was hit in early 2022 and it hasn't budged since. Now, sources tell CNBC-TV18 that RBI, SEBI and fund houses are in continuous discussions about raising these limits. And this discussion is coming at a time when global funds are not just recovering, but outperforming their benchmarks. In April 2025 alone, international mutual funds delivered average returns of 8.51%, making them the top performing category according to Value Research. Zoom out to the last 12 months and the rally looks even stronger. Look at some of the funds. Mirai Asset, Hang Seng Tech ETF, FOF up 61%. Mirai Assets, another fund, NYSE FANG Plus ETF is up 41%. Another fund, Nippon India ETF Hang Seng Bees is up 32%. Invesco's India Global Consumer Trends FOF is up 25%. But it's not just about the past year. Even in the first quarter of 2025, international funds comfortably beat the broader Indian market. Look at some of the numbers. DSP World Gold Fund 31% and its benchmark has delivered 37% globally. Mirai Assets Hang Seng Tech ETF FOF is up 25%. Similarly, ICICI Pru Strategic Metal and Energy FOF is up 21%. And Nippon India ETF Hang Seng Bees is up 15%. So all of these funds, including those investing in Brazil, look at HSBC Brazil Fund, 15.12% in a quarter, beating the benchmark. Compare all of this to BSE 500 TRI, which posted minus 4.39% over the same quarter. So the opportunity is clear. Despite delivering some of the strongest returns in the market, most of these funds remain close to Indian investors. Now, why are the fund houses wanting a cap revision? This cap was last revised in 2008. Mutual fund industry AUM has grown 10x since that time. Investor appetite for global exposure is rising, and global themes from AI to clean energy to precious metals are gaining traction. For now, fund houses are waiting on the RBI to signal a change, because while the world's markets open up, Indian investors remain in a regulatory lockdown, and the cost of missing out is growing with every quarter. Back to you.
All right, with that, we'll slip into a short break. Come back at you more on the markets and stock-specific action on the other side.
Welcome back. Well, there is some amount of pressure which is seeping into the markets now. So the Nifty is down around 141 odd points, down 0.5%. We have the Sensex, which has lost over 500 odd points. So there's a sudden decline which has taken place in the markets just in the past couple of minutes. If you want to just talk about a couple of the losers at this point in time. There is exaggerated losses which have come in to a couple of the frontline stocks which have already been on a losing streak. So UltraTech Cement is now down over 2% NTPC is down around 1.6%. Grasim, BPCL, JSW Steel, all of these stocks are down anywhere between 1% to close to 2%. Joining the list has to be a couple of stocks from the auto space. So Eicher Motors, for example, has slipped into the red. Bharti Airtel, Apollo Hospitals, all of these stocks are now trading in the red as we speak. So just watch out for it because the mid-cap index also looks quite precarious at this point in time. Just about higher by around 80 odd points. Seems like it's going to probably slip into the red as we speak. But on our new show, The Global Reset on CNBC-TV18 Prime, our colleague Prashant Nair caught up with Rajiv Jain of GQG Partners, which is the largest foreign institutional investor in India. Rajiv believes India isn't a proxy play, it is the real deal. Also adds that the foreign flow drought may break if large caps lead the way. Here's a slice of that conversation.
See, if you look at Vietnam, Vietnam obviously is playing the same playbook that has worked very well for East Asia in general. So Japan was the first one after the Second World War, then Korea, Taiwan, Singapore, Malaysia to a little bit till late 90s, early 2000s, till China came along, and obviously China. And India and Vietnam more recently. I think India is slightly different. While India is trying to get the manufacturing side, and I think they have succeeded in a quite remarkable manner. By the way, it's quite remarkable how fast they've been able to, with the right policy mix, to attract manufacturing base, because that helped China tremendously to incentivize and attract these large sophisticated manufacturers. I do feel that India is part of the solution from a U.S. context. Particularly if you look at Vietnam, Vietnam has kind of become they do a lot on their own, but it's also become a transshipment hub, which the U.S. Trade Representative talked about a number of times, which is why we feel that Vietnam would not be sort of scot-free because it is a big transshipment hub. And hence if you look at the 46% that was announced, was higher than a lot of other countries. Second thing is Vietnam also a big current account surplus. So our framework is as following. We feel that we have to look at countries that have that don't have huge current account surpluses. Countries that have huge surpluses with the US are far more vulnerable. And Vietnam fits the bill, so does Korea and Taiwan. India doesn't have a huge surplus, which means it also shows that it's a huge domestic economy. So we feel from our vantage point, India should be a net beneficiary. There'll be hiccups. There'll be 2 steps forward, 1 step back. But I think direction is clear. India would be on the positive side. Actually, Brazil would be, and Indonesia would be too, versus, let's say, Vietnam or others.
So it's quite interesting. You're saying you already this year, this calendar year, put in about $2 billion new money to work in India, right?
Yes.
And just to sort of, for our viewers, you bought into Bharti in a big way. I think that's a newer bet, Rajiv. And I think one name which we discussed in a very different context the last time we spoke, HDFC Bank. I remember you telling me that you've been, you held that stock for years. I mean, long back. And then, of course, you didn't own it for a long period of time. You didn't have it last year. This is, in that sense, a new addition. You want to talk to us about that, Rajiv?
Yes, so HDFC Bank, we thought was going through a sort of integration transition period as such between the two, HDFC and HDFC Bank. So since last September or thereabouts, last quarter last year till first quarter, we put almost $2 billion in HDFC Bank. And Bharti we started buying early last year, and then we have doubled down again this year. We've added a little bit to some of the other names too. Nothing meaningful, but they're like a few $100 million here and there. Nothing meaningful. So these are the two big positions. The other ones we quite like. I mean, you have public information on that. So because we're still very bullish on the utility/infra type assets, we still like real estate. So and what's interesting, we feel this time around is that seems like, and for good reason, the rally seems to be led far more by large cap than mid cap. Mid cap are fine, but the valuation is less supported than a large cap, and large caps are now transitioning from, they've digested last few years for different reasons. And a couple other names, by the way, we just started, we recently initiated, so we are active, we can't talk about those. Again, large cap. So we feel that the large cap space looks fairly interesting, actually.
Just one question, Rajiv. You know, since the top last year on the Nifty in September, late September, I mean, foreigners sold about $25 billion worth of stock. And of course, they've turned buyers now. I mean, my question is, what was that? Was that just purely driven by valuations? I mean, was it some other considerations at play, money moving out of EMs into DMs, that kind of thing? And do you think now flows will be much steadier here, foreign flows, in your opinion?
So look, I mean, nobody knows for sure, right? Because there are tens of thousands of investors, so who knows? In my opinion, there's one aspect which may be impacting more flows. So if you look at global emerging markets as such, that asset class in general has been under tremendous pressure. So we are kind of a little bit odd that we are generally seeing inflows. Most of the emerging market shops are seeing outflows. Okay. They are the most obvious buyers of India. If you look at global managers, global funds, again, we have exposure in global also. Most of the folks do not have that much exposure. So you kind of have a scenario where the emerging market managers are struggling. Look, if you look at the EM indices, the indices have not gone anywhere, broad EM, emerging market indices, for 12, 13 years now. I mean, they peaked in 2010, 11, depending which market you look at. And so the biggest buyers have no longer buyers. In fact, they're sellers because they're seeing own redemption their own side. If you look at global manager, they're not engaged. And I think that is part of the issue. So you have kind of in a no man's territory. And that might change, by the way. So if large cap do well, I think foreign money should come back. Again, look, from our perspective, it's neither here nor there. It's sort of an interesting statistic more than anything. But I think my feeling is that if large cap begin to do well, you will see more traction and more inflow than not.
Interesting conversation. We'll get you excerpts of that all day today on CNBC-TV18. With that, what we'll do is take a short break. On the other side, Manisha Gupta joins in with Peter Maguire, CEO, Trading.com. Stay with us. Welcome back. You're watching us here on Halftime Report. Yesterday, even as the markets were going higher, we were pointing out that the India VIX is rising, which told you that there is volatility which is on the cards. And today as well, as we recovered from the lows, what moved higher was the India VIX. As we speak, closer to 19, telling you that, rallies are not sustainable, but at the, same time, low level, we are seeing some purchase. So between this range, we will see the market move on and off. A couple of mid-caps doing a lot better. We have CCL Products, which has spiked up once again, taking this month's gain on the stock to about 46%. So an 8% up move is what we've seen on CCL Products. Good numbers coming in, but higher coffee prices means better revenues. But they, again, have a fixed EBITDA that they get per unit of coffee that they make and supply to all the global brands. But speaking about coffee, speaking about commodities, we have Manisha with us. Manisha, coffee.
Oh, well, yes, after this show, Mangalam, for sure. But right now, we are also joined by Peter Maguire. He's CEO at Trading.com. Peter, hi. We're talking about coffee, which the prices have been surging, and so have been the coffee shares I've been looking at. But what has also seen some better moves clearly has been platinum within the overall precious metals. So gold, after that all-time high, seems to be trading in a range. Silver prices, do try to break from that recent range that we've created, but haven't been able to do that. Platinum, in the meanwhile, has done quite well. How are you looking at overall precious metals right now? Would you say that now we're getting stuck in a range? A major trigger is perhaps what the market is waiting for.
Well, good afternoon, Manisha. I mean, there's so many components that make up the storyline as far as gold and precious over this year. We're nearly at the end of 5 months in. We've seen a dramatic move to the upside, and now it's taking a little bit of that heat has come out. There's no doubt. I mean, when you're seeing platinum's been nearly to the point of parabolic over the last probably the last, say, 4 to 5 weeks, really strong growth. And that, I think, has hit everyone by a little bit of a surprise. That's where a lot of smart money has really traded, certainly on the futures of platinum. So at the moment, I think that it will continue to have that nice uplift, but one's got to be very mindful. What's happening as far as bond rates, what's happening as far as US dollar, and the talk of tariff, which certainly hasn't been put to bed at all.
Most people, including Trump, seem to be believing that weaker dollar perhaps is better for an economy there. We're trading below 99 at this point in time. What's your sense on the dollar index, and how are you looking at the other crosses?
Well, it's 99, Manisha. I think, do we see a rate cut in this quarter? And I don't know whether that will materialise, considering we've only a month to go until the end of June. So it's going to be a summer rate cut if that's where Fed Chair Powell decides that's what he wants to see. So you would think that there would be a fair bit of that softness as far as US dollar, one would think, would continue, maybe a 98, 98.20 handle. And it seems to be in a downdraft at the moment. So that's where the focus is, what's happening as far as US dollar, and are we going to see some further sell-off, as far as bond rates rising and so on.
Peter, how have you also seen the euro? Because with this tariff on and tariff off and deferred tariff, the euro also has been quite volatile.
Absolutely. I mean, when you think about it, Manisha, we're nearly at 114. So there's every chance you could see a 115 handle, I think, by the end of the week. Maybe a little bit bullish, but I certainly think 114 is going to be taken out very quickly. So the overall momentum is going to be stronger euro. That's where all the focus is. We understand the storyline that, Saturday our time was, we were going to see a 1st of June kickoff as far as tariffs of 50%. Now, that's been pushed back to the 9th of July, as we know. We understand Ursula von der Leyen, her thoughts and processes, and it's all about negotiation. So let's see if they can stack a deal together. And but I think there's going to be a lot of volatility between now and that point.
Peter, sell dollar is one trade that we understand. What do you see another pair trade with that? Is it going to be buy euro, Australian dollar? We've seen some moves come back in Japanese yen as well. So what are you looking at, the cross-currency trade there?
Well, yen's a nice one. I mean, you've got to be conscious, but I'm certainly concerned as far as what's happening there on the Japanese front as far as bond yields, Manisha. If you're looking at it as a currency trade, I think anything against the US dollar, keeping a close eye. Swiss franc's been a great trade. The Aussie's had a big run up already. It's up from 58 to 64.5, nearly, that 65 sort of, we're knocking on the door. So I'm more focused as far as euro. I want to see what happens, and I think that's where, and don't take your eyes off the pound as far as pound dollar. So, yeah, there's still plenty of enjoyment and plenty of dollars to be made out of currency trading at the moment.
Sure is. Peter, how are you also looking at the base metal prices right now? Because here, yet again, it is about geopolitical tensions. We've seen inventory rise. Electrification is a demand that we will continue to see demand coming in from. Within the metal space, are you picking up a strong trade right now?
Well, Manisha, when you're looking at copper, it's back at 9,600 on the LME, and that's been bid up strongly. So all of those industrial metals are nice. I got iron ore running at 100. So there's no spark there. If it was 130, 140, it'd be a different matter. But keep a close eye on some of those base metals, or the industrial metals, I should say. And there's probably every chance you could see 10,000 for copper over this summer period. So, yeah, I think that's where the general momentum is. More bullish than bearish.
All right. Peter, you've been a regular visitor for many years for many of these OPEC meetings. Now, there's yet another one coming in. And the dates tend to change very quickly, right? The 8 OPEC plus members are meeting on 31st, and the rest of the OPEC and allies are meeting on 1st of June. So there's just plenty of meetings there and statements that continue to come in. How are you looking at the production increase and your sense on July output?
Well, Manisha, I take on board, I want to put my mind back to 2 weeks ago when President Trump spent considerable time in Saudi and then with the UAE and just across the water from you guys and then into Doha. So the MBS situation is going to be, I think, more increased. They're really concerned as far as compliance from some of those smaller producers. And the overall theme is going to be get the production up. I feel as though you're going to see a continued softness as far as crude prices if there's no geopolitical, outliers that come to play. But yeah, the overall momentum at the moment is going to be more bearish than bullish, I think, for the energy sector.
That goes for gas as well, where we're not looking at too much of demand right now. But going forward, it's going to be about the Atlantic hurricane season. And then, of course, inventory increase before winter sets in. So how soon do you see that happen? And where do you see natural gas prices, let's say, for the next couple of months and then for the second half?
Well, you know as well as I do. I mean, when you're thinking about the hurricane season, that's probably, we're still about a month and a half to 2 months from that really starting to kick off. And it doesn't get its full steam until really September. I think that's the middle of the season. So I'm conscious as far as nat gas. I feel as though, again, if you see something ratchet up as far as hurricanes and all of those Mother Nature impacts, you're going to see volatility. But at the present time, I wouldn't be surprised to see that nat gas price just take a little bit more softness to the downside, and that's the overall theme. I'm keeping an eye on what's happening in OPEC, Manisha. I mean, we're in a very different world now than what we were going back 3 weeks ago, considering the I think a unification between MBS and President Trump.
That point, the unification between MBS and Trump. Thank you, Peter, for joining in and always, giving us a great amount of insights. What we'll do is we'll wrap up on this edition of Halftime Report today. Come back on the other side, we have Business Lunch taking all the market action forward.